Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we discuss all things stock markets, all the latest trends as to how the stock markets are moving in trade, especially when you talk about the benchmark indices, how are they faring, the sectors that are performing, and we will also keep an eye out on the big earnings and the earnings impact as well. We'll also be joined by an earnings management, so keep an eye out on that. But first up, a quick check on how the markets are doing at this point in time. 18,109, that's the current level for the Nifty, 0.45% up in trade. Talk about the kind of movement that we are seeing on the Nifty. It's about 36 advances to 14 declines. The market breadth inching towards the positive as well. The mid and the small caps actually show a divided trend. There's a mixed trend there with the mid caps hovering near about 0.4% up in trade, but the small caps down by about 0.07% down as well. In terms of the other sectors that we speak of, in the Nifty 50 index, you do have some slight losses coming in on the metals pack and the realty pack, but rest all of the sectors are actually up in the green, buoyed by the kind of rally that you're seeing in the banks and the financial space today. 0.8% of a move on the upside. Apart from this, it's the PSU banks, the private banks and the financial services, all three components really supporting the market sentiment today. Auto stocks are also in the faster lane, up by 1% today. Pharma stocks also rising high, 0.8% of a move on the upside. IT stocks also supporting the momentum, about 0.9% uptick from that one too. FMCG, so it's all cylinders firing, barring the metals and the realty pack in today's trading session. Talk about the gainers as well today. You do have stocks like Power Grid, Sun Pharma, Eicher Motors, Divis Laboratories and HUL really up in the top 5 as far as the Nifty 50 gainers are concerned. All of them up by 1.5 to 2%. On the losing side, you do have, some of the stocks that are sulking post the earnings. You have Ultratech Cement, for example, it's down by 3%, and that's despite the volume growth that we've seen on a strong footing. Adani Ports is down by over 1%. JSW Steel, Grasim, NTPC, all dragging a bit in the trade today. But the company that's on our radar on the earnings focus is Yes Bank, that reported its earnings for Q3. And after the earnings, we've actually seen the stock really reacting very sharply on the downside today. About a 10% downside opening. We saw 12% intraday on the downside too. The stock has also reacted to the judgment of the Bombay High Court, which has quashed the writing down of about 8,400 crore rupees of additional tier 1 bonds by the bank's administrator. So that is something that has really got some of the sentiments really hit. So to discuss more on the earnings front and what can really shareholders and investors expect from Yes Bank going forward, joining in is the top management of the bank with me. Mr. Prashant Kumar joins in. He's the MD and CEO of Yes Bank. Welcome, sir, and thank you so much for taking the time out for this discussion. Well, first up, I'll speak to you about the judgment and then we will move on to understanding more about the earnings fine print too. So on the judgment of the High Court, what could be the potential impact of this, and also what's going to be your next step? Are you thinking of contesting this? You also have mentioned that perhaps you may have strong grounds to appeal into the Supreme Court. On what basis do you really say that?
So I think one part is definitely the decision of Honorable Bombay High Court has come to us as a surprise because the earlier the Madras High Court has also taken a decision in terms of supporting this decision. Okay, but yes, we have been given 6 weeks to file an appeal in the Honorable Supreme Court. We have the legal opinions which have the strong legal grounds in terms of making an appeal in the Honorable Supreme Court, which we are going to do as soon as possible. That is one part. The second thing, in terms of the impact, I think we need to understand in terms of the characteristics of these instruments, 81. One, like they are the perpetual bonds. So it means discretion to exercise call option. It rests with the bank. So it is not a compulsion on the bank to exercise the call option on the 81. That is one part. Number two, in terms of coupon or the interest payment on these bonds, I think again the discretion to pay interest on these bonds, they also rest with the bank. Only in those years where bank is paying dividend to the shareholders, only in those years you are under an obligation to pay the interest to the bondholders. So and third part, that the previous year interest payment does not accrue in the next year. So it means in 1 year, if the bank is under a loss and you don't pay, or if the bank decide not to pay interest on the bondholders, it does not carry forward in the next year. So basically, there is absolutely no risk in terms of the operating profit of the bank because of this part, and also not in terms of like because they are the perpetual bonds. Okay. So I think we have very strong grounds.
Okay.
We are making an appeal in the Honorable Supreme Court. Okay. And there is no negative impact either in terms of any outgo or any other profitability.
Okay. Have you heard from the RBI officials? Is the RBI also going to appeal against this into the Supreme Court?
Yeah, this is our understanding.
Okay, okay. Let's come to the earnings front now, sir. I wanted to understand from you that net profit has plummeted about 80% to about 55 crores in this quarter. Provisions and high provisions could have been perhaps the key reason behind this. If there are any key other reasons that you could share with us, and also help us understand, is it a one-off in provisioning, or would you have to continue to do higher provisioning in the next quarter as well against these aging bad loans?
So I think the one part which is very, very positive for us, our operating profit has grown by 25%. Okay. And this is one of the highest operating profit in the last 8 quarters. So I think we are seeing a very good business growth. Our deposit growth is around 16%, and especially the retail deposit is more than 20%. So we have been able to stabilize on the deposit and with a control in the cost of the deposit. And similarly, we are having almost a 12% loan growth. And now our net NPA ratio has come down to 1%. Okay? And our other income has actually grown by 55%. So overall, there is a very good traction in terms of our core operating parameters. This quarter, there was a aging related provision, and which has not been offset by the recoveries and the resolution. So sometimes there is a timing mismatch between the aging related provision and the recoveries from the bad loans. So I think this has been one of those quarters. But currently, if you see that we have a 1% net NPA and 2% which would be sitting in our security receipt. So over a period of time, the bank has to make provision for uh, this pool of assets, which is 3%. But during this period, we would also be able to make the recoveries and the upgradation. So this year, we have already made the recoveries to the extent of 4,300 crores. And our target is more than 5,000, which we are very confident to overachieve. So I think if there is no timing mismatch between the recoveries and the provisioning requirement, then this can be considered as one-off quarter.
Okay. Also to speak about the asset quality, that has improved in this quarter for you, both on the sequential basis and on a year-on-year basis, and both on the gross and the net front as well. What I wanted to know from you is that, is it sustainable and can it come down even further in the coming quarters?
No, it would definitely come down further. Because I think what improvement we have seen, we used to have almost 14% GNPA number. And that's why we have done that ARC transaction. So today we are with a 2% GNPA number and 1% net NPA, which is, I think, one of the best in the class. So I think this trajectory would continue to improve, where like our net NPA would come down. And since we are having now the slippage would remain within 2%, and since we are making the recoveries, I think going forward, we'll see the further improvement on both GNPA as well as net NPA.
Okay, where do you see it coming down to?
No, it's very, very difficult to immediately predict. But I think the best part is that today retail and SME, it constitute almost 58% of our loan book. And we are seeing a very good quality on both retail and SME, and we are not seeing the slippages coming out from that. The corporate book has already come down to almost like 27, 28%. So I think except those large corporate book, there has been a very good control. And on the corporate side also, this is the legacy book. So I think whatever slippage we are going to see is going to happen only in the corporate. So I think overall there is a very good control in terms of slippage. But yes, for the legacy book, you need to make a provision, which would be offset by the recoveries and the resolution.
So in the next 1 or 2 quarters also, do you see the slippages to continue to be under pressure? I mean, like, can they
No,
continue
no,
to escalate over the next 1 or 2 quarters?
no, we don't think so. I think the slippage in this quarter was like a one-off kind of thing. And going forward, we would be seeing a lower slippage.
Okay. Can you share more on the advances and the deposits? Like you mentioned that retail was good this time as well. I think the highest ever for you in a quarter. And also give us a guidance on the loan growth going forward, since in the current quarter it is lower than the industry's growth of 17%.
So one part, like if first I would respond on the loan growth. Our loan growth on the retail is more than 40%. And similarly, loan growth on the mid market is also more than 30%. But since like large corporate has been a legacy book, so there were certain loans where we wanted them to have repay our loan, which we have been able to successfully do that. So only because of a degrowth on the large corporate to the extent of 18%, the overall loan growth is around 12%, which is lower than the industry, what you are rightly saying. But I think the retail, the mid market, our growth is much better than the industry. So I think once we are able to arrest this degrowth on the large corporate, we would be seeing our loan growth in line with the industry. And next year, definitely our loan growth would be within like 15 to 20% kind of thing. On the deposit front, like if you see, it's a 16% YOY growth. And quarter on quarter, has been a growth of 7%. This quarter has been very, very difficult for the entire industry because of the rising interest rate. In that backdrop, I think the bank has been able to grow very well on the deposit franchise. And most of the deposit growth is coming from the retail, which is almost like 22% growth on the retail deposit.
Okay, then I understand that that is going to be your continued focus going forward from here also. And do you also
No,
see a scope of improvement in the credit offtake in the coming financial year?
Absolutely. I think our deposit growth would continue to trend on these lines, and we would be seeing a better growth on the loan side because we would be able to arrest the negative growth on the large corporate. And the retail and the MSME and the mid market, they are absolutely are going to grow on the same proportion.
Okay. There's been also a jump in the NII growth of 11% on a year-on-year basis, but a dip sequentially. And similarly, for your net interest margins, also they've improved on a year-on-year basis to 2.5%, but they've declined sequentially. So, could you share an outlook on both NII growth and NIM as well going forward?
So in terms of our net interest margin, they are actually flattish as compared to previous quarter, because in the last quarter we could also have some interest earning from our NPA pool. Okay. Otherwise, last quarter also, if you compare apple to apple, it's a flat of 2.5. But going forward with the improvement in the loan growth, I think our NII would also move forward, would grow further. And the margins, because now a large NPA pool has gone out of the bank, our margins would also sequentially improve over a period of time.
Okay, okay. And could you share, how quantum, any projection that you could share with us?
I think in the current scenario where the interest rates are going up, everybody is trying to protect the NIMs. So I think in that scenario, I think we would not giving a immediate guidance, but I think once the interest rate would stabilize into the system, then we would be in a position to give a better guidance.
Okay. You've also had a recent capital raise. I wanted to understand, does the bank really think that it needs more capital to boost further business, or is this enough for now?
No, I think we are having one of the best capital ratios in the industry. Our core equity, which is the CET1, is 13%, and overall capital is 18%. I think this capital is very strong, and it takes care of our growth requirement for at least next 3 to 4 years.
Sir, also I wanted to understand, I think your earlier guidance of CASA, taking it in the March 2023 to about 35%, are you sticking with that, or is it going to be lower than that?
No, it would be very difficult. I think in the rising interest rate scenario, everybody is seeing a fall in the CASA ratio. We have also seen a fall of 1%. But I think this year achieving 35% is not going to happen. We are working both on current account and saving bank, but I think in this scenario, reaching 35% is not possible.
Okay, just last word from you, Mr. Kumar. Just for all the shareholders and investors out there, right there, on the one hand, the investors would be happy of your bonds that, the High Court has given this order, you're going to be appealing. And on the other hand, the shareholders would be worried about that, whether this can actually have an impact on your capital going forward. On the earnings as well, there have been a slight miss on some of the parameters from the analyst point of view as well. What would you really want to say in terms of, how many more tough quarters and then we see the complete back on track for you, so that we can also see, of course, the stock prices have risen 35% in this year, but after this news there's been a substantial decline. So going forward, what kind of message would you want to pass on?
No, I think like in the current quarter we have finalized two very significant transactions. One in terms of capital raise, the second also in terms of transferring the entire bad loan asset portfolio to the ARC. So I think that currently the balance sheet is very strong. The operating performance of the bank is continuously improving. In this quarter, the net profit has come down because of the provisioning requirement, which happens sometimes. But I think going forward with the kind of business trajectory which we are seeing, and also in terms of the core operating profits, I think in the coming year, what we are targeting, like over a period of 2 to 3 years, to give a return of 1% ROA to our investor. And similarly, over a period of 3 to 5 years, it would be in the range of 1.5%. So I think the bank not only has stabilized, but moving very fast in terms of growth, in terms of both business as well as the profitability. And we have a clear-cut strategy. And I think on all the fronts, we are absolutely moving as per our guidance, except like on the net profit, which has been the result of delay in some of the recoveries.
Sure. Okay, I noted that. Well, thank you so much, Mr. Kumar, for being with us on the show and discussing all the fine prints of the earnings. All the very best to you for the future quarters. And here's looking forward to many more interactions in the future as well. And we will be looking forward to an update from your side when you appeal to the Supreme Court against this order as well. And if you could give us more details as well once you file that as well. Many thanks for being with us on this show.
Thank you so much.
All right. Let's move on to see how the markets are trading at this point in time. Well, especially when we talk about the Yes Bank share, we did see that the stock market had reacted very, very sharply right at the open, 10% and 12% downward. But they have seen a recovery from the lowest point of the day, 7% down currently for Yes Bank share, 18.35. You heard the management talk both about what are their plans as far as the Bombay High Court order is concerned on the writing of the ATF 81 bonds, and also the company's own take as to how they are going to be appealing, and they have a strong ground to appeal against this order in the Supreme Court. And they also believed, and they told us exclusively, that the RBI may also be looking forward to appealing against this order in the Supreme Court. So we will have to look for that as well. So now let's welcome our other guest on the show. We have a markets expert with us. Mr. Kranthi Bathini joins in from WealthMills Securities. Welcome, Mr. Bathini, and thank you so much for taking the time out for this discussion. We were just having a live discussion with Yes Bank management. We have seen that the stock price reacted very, very sharply on the downside. So let's start off with that comment, comment on your own take on Yes Bank, both the earnings and the order that we've received from Bombay High Court, and whether you still believe that despite the company's confidence in providing stable earnings going forward from here, the current overhang and the current uncertain situation, is that going to be taken in comfortably by the investors, or is there going to be more pain for investors and shareholders of Yes Bank?
Sakshi, what I perceive is going ahead, there will be some sort of pain would be there in Yes Bank, as we have been telling on your shows earlier, discussion on Yes Bank earnings season for the Q2 quarter also. The pain is not over for Yes Bank. And as all the banks have been reducing the provisions, Yes Bank, on the other hand, has been increasing its provisioning. So still there is some kind of pain left in the Yes Bank for the shareholders. and also the uh, the the recent judgment that came from the Mumbai High Court, and the outcome, how it's going to come from the Supreme Court as the bank is going to appeal. So there are some lot of ifs and buts still there with respect to S Bank is concerned. We have been kept on telling this is the investment proposition or trading proposition just for the high risk appetite investors only, not for a retail ordinary investor.
Okay. Let's also take your views on some of the other earnings, and then I will come to the overall market scenario as well. Since we are talking about banks, let's also talk about the other larger private player. ICICI Bank Q3, the net profit rose by 34 odd percent. The NII rose, by 34.6% also to 16,465 crore rupees in the quarter as well. So there's been a strong beat on most of the consensus estimates for some of the parameters. The domestic loan book grew at a healthy 21.4% too, by loans which were extended to small businesses and to retail largely. The gross bad loans as a percentage of its loan book has also come down to 3.07%. Overall, what do you make of the earnings of ICICI Bank? We have seen that ICICI Bank has performed better than the other major peer HDFC Bank in terms of the stock market performance over the last 1 year or so. Going forward, do these earnings continue to project stronger show on the stock markets as well, and for investors and shareholders of ICICI Bank?
Definitely, Sakshi, as you rightly said, mentioned about all the parameters of ICICI Bank is doing extremely good. And going ahead, the bank can continue the same kind of momentum in terms of its earnings are concerned. And in a high interest rate regime, as we are going witnessing, and as we are going in, the interest rates are going up. The large cap private sector banks and retail centric banks can do extremely well in this kind of environment, and investors can hold on their positions with respect to ICICI Bank is concerned going ahead also.
Okay. What about Ultratech Cement, the cement major? Your thoughts on the kind of, we've seen the stock price in fact crack a little today, and that is about 3% odd post the Q3 earnings. The company has said that the rising government spending and the recovery in rural economy on the pickup of farm incomes and the pre-sales of housing real estate should definitely help the industry recover. But overall, we've seen a lot of action in the cement in pack as a whole because of the mergers, acquisitions, big players entering, and the way it created a lot of discussion among investors and analysts as to how to approach this space. Your thoughts on post the earnings, Ultratech Cement as a potential investment option, and also in the cement space, if you believe that this could be the chosen one as a stock, or do you have any other preferences?
At the present moment, Sakshi, there is the commodity players are concerned and the construction activity companies are concerned, especially the cement. We can see the pressure of rising input cost in the Q3. We can see for the earnings of companies like Ultratech Cement is clearly visible. But going ahead, we need to see the budget is there ahead with us in next coming week on 1st Feb. So what kind of government infrastructure plans, and as for the cement companies, Q4 earnings are extremely important because a lot of strong construction and all allied activities that take place in Q4. So Q3, of course, there is a pressure of margins on the companies, rising input cost and all. But Q4 is the quarter we need to look forward. But investors, they can hold on to their position because infrastructure, there is going to be a big emphasis going ahead. So investors with a medium to short term or long term, they can hold on to their position at this moment. Especially the cement is concerned. There is a consolidation that happened, that has been happening right now. We need to see what kind of moves that are going to come in South market going ahead. But for the investors, this is the space they can get mid-teen returns kind of returns for the medium to long term investors are concerned.
Okay, okay. Also, Mr. Bathini wanted to understand on Reliance Industries, the biggest earnings that we saw post the market hours on Friday. The stock price the stock has reacted today after the earnings. Some of the big highlights were definitely a miss on the net profit front from the estimates. The revenue rose by 15% year on year, but the biggest highlight was perhaps on the how board approved 20,000 crore rupees of a fundraise as well. Your own thoughts on how you read the earnings fine print of Reliance Industries, starting from O2C, the retail, the geo business, the petchem as well. Overall, what sense did you get, and how should investors be really approaching? Or most of the brokerage houses are still quite positive, and they've given upwards of 3,000 rupees kind of targets on Reliance Industries post the Q3 earnings. Your own thoughts?
Yes, actually, Reliance Industries results are in line with the expectation, but there is a kind of overhang in terms of their revenue growth and profitability also concerned. And one thing is what Reliance have done is in last couple of quarters there has been an emphasis on lot of capex is concerned that has been going up, and also the last year, the company overview was to make the Reliance Industries as a debt-free company. But all of a sudden, due to the new investments, company motto and theme has completely changed from a debt to making the company a debt-free. Right now, the balance sheet the debt has been going up. That is one way positive for the long-term investors, because a lot of the new initiatives the company is making, like entering into the green energy space and all, it need a lot of capex for the company. It need a lot of capital for the company going ahead to make the future growth to sustain. This is the reason some kind of pressure is there, we can see on the margins. If I have to bifurcate the business models, the new age businesses like geo and retail and the other media businesses are there doing extremely good, but the pressure we can see is the traditional set of the chemical and oil businesses. There is some kind of pressure. Overall, summing up the consolidated part of Reliance Industries, definitely investors, any dip the market offers right now, as the market is in a consolidation phase, investors can uh, accumulate the stock for a long-term horizon. We also have the similar kind of target, what you mentioned, the consensus target of 3,000 for Reliance Industries in the next 12 months
Sure.
period. Definitely for investors, they can accumulate any weakness in the market, any weakness in the Reliance Industries for the longer term horizon.
Okay, so we've discussed four earnings today. Yes Bank, ICICI Bank, Reliance Industries, Ultratech Cement as well. Out of these four, which stock do you think could be a potential buy after the earnings now for a fresh investor?
Definitely, Reliance Industries offers a good margin of safety for the investors. They can, and this is a stock for all the seasons and for everyone's portfolio. So Reliance Industries is definitely a buy for the investors for this moment.
Okay, and overall on the stock markets, your own thoughts. We've opened strong today, although the markets are slightly off the day's high point. But do we see any more clarity? Because the first half of January has been pretty volatile and directionless per se. When you talk about the stock markets, currently we are just about a week away from the budget, when we will see that as the biggest trigger emerging for the stock markets and perhaps could provide that direction. But before that, in this 1 week, what should be the ideal strategy that investors must have?
Sakshi, currently what we are observing in the market is there is a complete consolidation that's going on. Market struck up in a range bound. Nifty has been moving and moving around that 18,000 levels. To break that level on the upper side, definitely it needs an extra boost either from the global markets or from the domestic market. The key event for us is right now the budget, and the other side the earnings, Q3 earnings that are coming into the market. But we have not seen any kind of great positive surprises with respect to the earnings season from the large cap companies. We can say Nifty 50 companies are concerned. So it's a mixed kind of earnings season right now, what we are witnessing. So this is the reason markets are waiting for some kind of forward-looking events that might come from budget or any kind of events that can take place in the global space that can really boost the market further. Right now, markets are spending in a time-wise correction, and for the longer-term investors, this is definitely a time they can do the cherry picking of the stocks in a staggered manner.
Okay, understood that. Well, thank you so much, Mr. Bathini, for being with us and sharing your viewpoints on all these stocks that we've discussed and overall market strategy as well. Post the earnings and ahead of the budget, what should be the ideal strategy that investors must follow? Let's come back to the markets and see how they're trading at this point in time. Still at the almost similar level, 18,095 for the Nifty right now, 0.4% of an uptick. The sectors, as I told you, IT sector in fact is now taking the lead, up over 1% in today's trading session, followed by the auto stocks that are up by 0.9%, pharma that's up by 0.8% as well, the banks that are up by 0.6%. Within that, it is the financial services and the PSU banks that are taking the lead today. And apart from this, you also have 0.5% uptick that you have on the FMCG basket too. So largely a broad-based buying, slight losses coming in on the small caps that are not performing. Metals are sulking and the realty stocks are sulking too. But we'll keep an eye out on how the markets really move forward in the second half of trading session, about 2.5 hours to remain, and whether we do see some more earnings provide some more cheer to the stock markets, and how do you really approach the markets from here on. We will continue to speak to experts and get you all those expert views as well. So do stay tuned on to Business Today TV to catch all those expert views and how do you really approach your investments when it comes to equities as well. Don't forget to subscribe to this channel and also stay in touch with us via all our social media platforms: Facebook, Twitter, LinkedIn and Instagram. Many thanks for tuning in onto this edition.
They are the top movers and shakers of Indian markets. The big market gurus, the real finfluencers, the titans of Dalal Street, brought under one roof by Business Today, the gold standard of business journalism, to discuss,